Hey there, fellow traders. Welcome back to Market Minds. Today, we're diving into the intriguing world of Nifty trading, spotlighting the pivotal role of support and resistance levels. You see, in the bustling market landscape, these levels operate as invisible barriers, subtly shaping the market's behavior. It's a fascinating dance of numbers and trends, a testament to the intricate workings of trading. Now, you may be wondering, why are these support and resistance levels so crucial? Well, imagine them as invisible walls or floors. When the price of a security, in this case, the Nifty index, falls to a certain level, that's called a support level. It's as if the price has hit a floor and it's bouncing back up. Conversely, when the price rises to a certain level, that's our resistance level. It's like hitting a ceiling. Understanding these levels is like having a roadmap of market trends. They give us clues about price patterns, potential reversals, and can even signal entry and exit points for trades. It's like having your own crystal ball, giving you insights into market movements. But how do we identify these levels? Here's where the magic of anchored VWAP comes in. The volume-weighted average price, or VWAP, is a popular trading benchmark. But when we anchor it to a specific point, it transforms into an excellent tool for identifying potential support and resistance levels. It's like having a flashlight in the dark, illuminating key trends and patterns. Today, we're going to delve deeper into this concept, exploring how the anchored VWAP can help us identify dynamic support and resistance levels for tomorrow's trading session. It's going to be an exciting journey, so strap in and let's get ready to navigate the thrilling terrain of Nifty trading. Today we'll explore how to use anchored VWAP to identify dynamic support and resistance levels in tomorrow's trading session. Before we dive in, let's understand what anchored VWAP is. VWAP, or volume-weighted average price, is a trading benchmark used by traders that gives the average price a security has traded at throughout the day, based on both volume and price. It's important because it provides traders with insight into both the trend and value of a security. Now, what makes the VWAP anchored? Well, the concept of anchoring is quite simple, yet profoundly effective. We anchor the VWAP to a specific point in time. This could be the start of the day, the start of the year, or any other significant event. By anchoring the VWAP, we create a unique line that provides a more precise picture of a security's average price for a specific period of time. So, how does this help us? The anchored VWAP can be a powerful tool for identifying potential support and resistance levels. When we talk about support and resistance, we refer to the price levels at which a security tends to stop and reverse its direction. Support is the price level at which demand is thought to be strong enough to prevent the price from falling any further, while resistance is the price level at which selling is thought to be strong enough to prevent the price from rising anymore. In essence, the anchored VWAP serves as a line of best fit for the price data, providing a dynamic version of these crucial levels. When the price of a security is below the anchored VWAP line, it's considered a potential level of support. Conversely, when the price is above the anchored VWAP line, it may act as a level of resistance. Now that we know what anchored VWAP is, let's see it in action. Let's bring up our Nifty Index 5-minute time frame chart. This chart is a trader's canvas, where we paint our strategies using various tools. Today, our brush is the anchored VWAP. To begin our masterpiece, we'll anchor the VWAP to a significant point on the chart. This point could be a previous day's high, low, or close, or even the opening range of the current day. The choice, dear traders, is up to you and your unique trading strategy. Once anchored, the VWAP line emerges, reflecting the average price based on volume since the anchor point. This line, my friends, is like a river flowing through the landscape of our chart, guiding us in our trading journey. Now, take note of the deviations from this VWAP line. These are not mere random fluctuations, but dynamic support and resistance levels. Picture them as hills and valleys surrounding our river. When the price climbs to a hill, it often finds it difficult to go further up. And when it descends into a valley, it struggles to go any lower. These hills and valleys are the dynamic resistance and support levels respectively. They act like invisible barriers, influencing the market's behavior. They are our signposts, helping us to predict where the price might pause, reverse, or break through. So, when the price hits the upper deviation or the hilltop, it often bounces back, indicating a possible selling opportunity. Conversely, when it touches the lower deviation or the valley floor, it frequently rebounds, signaling a potential buying opportunity. As you can see, these deviations act like invisible barriers influencing the market's behavior. By understanding and leveraging these dynamic levels, traders can make informed decisions, potentially gaining an edge in the market. Remember, the anchored VWAP is not a crystal ball, but a powerful tool in a trader's arsenal when used wisely and in combination with other indicators and strategies. These deviations are like rubber bands that the market tends to snap back to. Picture a rubber band stretched to its limit. It's under tension, right? When released, it snaps back to its original shape. The same principle applies to deviations in trading. When the price of a stock or index moves away from the VWAP line and hits one of these deviations, it often bounces back like a rubber band. This is a phenomenon known as reversion to the mean. The price tends to revert back towards the average, or in this case, the VWAP line. Now, you might be wondering, what happens when the price hits these deviations? Well, two main things can occur. First, the price can bounce back towards the VWAP line. This happens when the price hits the upper deviation, which acts as a dynamic resistance level. Resistance is the level at which selling is thought to be strong enough to prevent the price from rising further. Second, the price can bounce back upwards when it hits the lower deviation, which acts as dynamic support. Support is the level at which buying is strong enough to stop the price from falling further. Essentially, these deviations work as invisible barriers, influencing the price's behavior, making it bounce back towards the VWAP line. But remember, while these deviations can act as potential support and resistance levels, they are not foolproof. There will be times when the price will break through these levels. That's why it's crucial not just to rely on these deviations, but to combine them with other trading indicators and strategies for a more holistic view of the market. So, as you navigate the world of trading, keep an eye on these deviations. Understand how they work, how the price reacts when it hits these levels, and how you can use this information to your advantage, because at the end of the day, understanding these deviations can give you an edge in your trading. So, as you prepare for tomorrow's trading session, consider anchoring the VWAP to a significant point on your chart. This will give you an insightful view into the market's behavior, allowing you to identify dynamic support and resistance levels effectively. Let's quickly summarize the key points we've discussed. The volume-weighted average price, or VWAP, provides a snapshot of the market's average trading price, factoring in both price and volume data. When anchored to a significant point, it transforms into a powerful tool to identify potential support and resistance levels. The deviations from the anchored VWAP line act as invisible rubber bands that the market tends to snap back to. When the price moves away and hits one of these bands, it often bounces back. The upper deviation serves as a dynamic resistance level, while the lower deviation acts as dynamic support. This dynamic nature of support and resistance levels is what makes the anchored VWAP such a valuable tool in your trading arsenal. It allows you to anticipate market reactions and make informed trading decisions. However, it's important to remember that while the anchored VWAP and its deviations can provide valuable insights, they're not foolproof. The market is influenced by countless factors and can often behave unpredictably. Therefore, always do your own research and don't rely solely on these tools. Also, consider complementing your use of the anchored VWAP with other indicators. A simple moving averages combination, for instance, can provide additional confirmation and further refine your trading strategy. Lastly, never forget the importance of risk management. No matter how confident you are in your analysis or how promising a trading opportunity might seem, always have a risk management strategy in place. This will protect you from potential losses and ensure the longevity of your trading career. That's a wrap for today's video, traders. If you found this content valuable, give us a thumbs up and share it with your fellow traders. Until next time, happy trading.